In the metals quadrant today, the April gold contract is really holding in well despite finishing its second consecutive move lower. Both of these moves were small relative to some of the volatility we've seen in the past in metals. The high today, 2045.50, was a bit more than 50 basis points higher, or a half of 1%, and was a new high actually versus yesterday, but we turned around and made a low of $2,029.30, which was down about a quarter of a percent. And the day ended up finishing negative versus yesterday's closing price. On a weekly basis, gold is still up almost 0.4%, but has obviously fallen from the week's highs. Today we had a bit of data conflict as we saw much of the small and medium-sized business PMIs across the different major economies in the world and the manufacturing sector come in stronger, but still in contraction territory, which is in and of itself a contradiction in reference to gold's reaction. But we also had risk assets rally based on strong Nvidia earnings. This type of fundamental action typically leads to lower gold prices, which happened, and it would remove the sort of impediment for the Fed to cut rates. But according to the CME Fed Watch tool, we are still looking at 4 rate cuts as the highest probability for 2024. Not a high probability, but the highest. The Fed minutes yesterday also threw some cold water on the urgency for the Fed to cut rates. But again, yesterday gold held in fairly well. Yields were also higher on the short end, which again backs up the idea that gold should be weaker than it is, especially considering the 2-year note is where the bulk of the rally on the yield is taking place. The 2-year note correlates highly with the Fed funds rate, and it has been trending higher for 2 weeks now. But gold is still hanging in well above that psychologically important 2,000 level. The next few days of gold's price action deserves watching.